Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. It's Tuesday, the 4th of April, and we have Jessica Amir, market strategist at Saxo Capital Markets, as our guest today. Jess, it's always great to have you on the show.
Great to see you. Happy RBA Day.
Well, happy RBA Day, and we'll be talking more about that and get your insights, Jess, just as soon as we take a look at how markets across the region have performed. We're going to start with crypto markets. We've got Bitcoin at 27,823. It's up 0.43%. Ethereum is at 1,805. It's up 1.59%. Looking at how regional stock markets have performed, we start with this SGX out of Singapore. It's up 0.79%. Bursa Malaysia is down 0.4%. Shanghai is up 0.23%. The ASX All Ordinaries is up 0.17%. The Nikkei is up 0.28%. The Hang Seng is down 0.81%. And rounding up the numbers, we've got the Kospi, which is up 0.44%. Jess, your view on market performance in the first half of the day?
Well, there's a lot going on, but I think if we could just say one thing, we did have softer than expected economic news out of the US overnight. So that's pretty much, I guess, in some parts of the market feeling a risk on mode, and that's caused the US dollar to fall. But I guess on the other part of the market, we do have oil price inflation picking up. So reading between the lines, I guess you've got two very different moving markets. One market moving higher on the back of softer than expected economic news, and the other cohort of markets or stocks and sectors that are doing well are those that are benefiting from higher oil prices.
Now, Jess, we've got to start with the RBA. Your thoughts on the RBA rates decision?
So, of course, it was a decision today that didn't really divide the nation because it was one that kept the cash rate at 3.6% as expected. Now, the reason for this is because we have seen a significant stress on the average Australian consumer. So we do know that Australian households are the second most indebted in the world, and the RBA themselves previously highlighted that almost 900,000 Aussies could come under financial stress when their mortgages roll from fixed to variable this year. So that's concern number one. Concern number two, about 25% of Australians have got mortgages that are deemed as at risk. However, the RBA did leave the door open to potential further tightening, given that inflation still needs to come down to be in line with its target. But all in all, we do see a pretty soft RBA ahead, given that financial pressures are creeping up on the average Australian, and inflation is also continuing to push higher as well. But the bottom line is the Australian household and consumer is very important, and the RBA doesn't really want to pressure that.
Now, I want to take a broader view, and especially where you're at Saxo. What is Saxo data telling us in terms of investor psychology and where they're putting their money today, given all the risks globally in markets?
That's a great question, Brian. So there's a couple of different ways that clients are navigating markets. So one way is that they're going long, or they're being essentially exposed to stocks and sectors that they like and they want to hold, and they think that will do well over the next 3 years, etc. So overwhelmingly, the most purchased and transacted upon stock across Saxo globally is Tesla. Now, the reason for this is because Tesla has, I guess, nudged forth as a leading competitor in the EV space. They're going to spend something extraordinarily whopping like $2 billion in cranking up production. At the same time, they've also slashed the costs of their EVs, and they're potentially moving into bed, I guess, with China's biggest lithium-ion battery producer, CATL. So that is going to drop costs going forth. So clients are long that stock, but we're increasingly seeing options for protection being used to protect falls or potential likely falls like we saw overnight in Tesla, given that margins or profits are going to be squeezed. The second really interesting development that's occurred in markets are clients are increasingly being conservative. So they're buying into bonds. And it's not just on the Saxo platform, but globally, we've seen over $300 billion of bond flows go into cash or go into the bond market over the past 3 weeks. So that's just extraordinarily. And we've not seen that before. And this is because money's coming out of bank deposits and investors are looking for those, those safe as houses, I guess you want to call it, type of returns. And the other thing that's happening is, Brian, that clients are also using ETFs to buy into those quality names. So we know companies like Microsoft, Alphabet, Apple, as well as Nvidia as well. So they're in the quality index, and clients have been plowing into the Qual ETF, and over $7 billion of flows has gone into that ETF alone. So there's different things, but all in all, most clients are bullish, but they're being quite conservative now and putting in protection into their portfolios.
So that's interesting. I think key message here, bullish, but then still conservative and protecting the downside as well.
Yep, that's it.
Now, Jess, a final question before we leave. What's on the economic horizon that you see that potentially this week could move markets?
Well, just in light of overnight's oil move with the oil price up 6%, obviously there's more inflation risk in the market. Later this week, we do have a couple of really important jobs reports out in the US. Now, the real risk is that we've seen CPI or inflation come down a lot in the US. We've had last night's read that pretty much might reverse that, given that a lot of forecasts are now suggesting that oil prices will be much higher at the end of the year than where we started. So that's one thing. But with the jobs numbers out, if we do see a surprise move to the upside or better than expected jobs numbers, that means that the Fed can go harder and for longer with rate hikes. And we're just quite cautious here. We do think that those high PE names that have done really well this year, for example, the semiconductors, with some of those PEs really high and far above the MSCI world average, we just think that there could possibly be not only some profit taking, but that it could also be some big sales. So that's something to be really cautious of. I mean, if just thinking about Nvidia shares are up 90%, right? But their
Yes.
PE ratio is 120 times. So it's very expensive. So that basically means any surprise stronger than expected eco print will see stocks like that succumb to pressure. So that's something to be mindful of.
Now, Jessica, on that note, thanks for your insight. Thanks for coming on the show.
Thanks, Brian.
Now, we've been speaking to Jessica Amir, market strategist from Saxo Capital Markets on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.